what is a cryptocurrency ETF and how is it really different from just purchasing cryptocurrencies on an exchange?
It's a fund that trades on an exchange traded fund.
Just how big, just how successful was the spot Bitcoin ETF launch?
Unequivocally, the spot Bitcoin ETF launch was the biggest ETF launch in the history of the world. Nothing else is remotely even close, to be quite frank.
Do you think 2025 will be another strong year, or are you seeing some signs of market saturation?
I think people are like waiting for their times and pullbacks to potentially get into the market. So yeah, I don't think it's saturated, but
hello, everybody, and welcome back to the Binance studios. Now, if you're following the spot Bitcoin ETFs, then you will have heard of our next guest. We have Bloomberg ETF analyst James Seyffart joining me to discuss a lot in this conversation, from the inflows of ETFs that have hit the market in 2024 to just how much their performance really impacts the wider crypto space, what ETF applications are pending, and also investor appetite. And could we really see meme coin ETFs hit the market this year? Well, James, first of all, thank you so much for joining today. How are you?
I'm good. Thanks for having me. I'm happy to be here.
Absolute pleasure. And I think it's a really interesting time. I've been following you on socials for a few years now, ever since the news of a spot Bitcoin ETF hitting the market really started to ramp up. And since then, we've been following your tweets quite religiously as a breakdown for the ETF guides. So for everyone that is listening that wants to kind of revamp or up their knowledge on the spot Bitcoin ETFs and the wider ETF crypto market, we're going to give a breakdown and explain a kind of a one-on-one guide. Let's start with the spot Bitcoin ETFs and breaking down what is a cryptocurrency ETF and how is it really different from just purchasing cryptocurrencies on an exchange, and why the cryptocurrency ETF wrapper, why it got so much media attention last year.
Yeah, I mean, I could talk about this for 3 hours and ramble on, so you might have to cut me off and stop me from talking at some point. But really what it is it's taking eventually it will be many cryptocurrencies will be able to be taken and put inside this ETF wrapper. An ETF, typically what most people think of it as, is it's a fund that trades on an exchange traded fund. The most popular ones hold things like S&P 500 stocks, so it tracks an underlying index. The gold ETFs, which launched in 2004, are also very popular. It just holds a single asset, which is most akin to what these, digital asset spot Bitcoin ETFs are. It's just holding a single asset, and it trades on exchange. And what it did with gold is it basically took this legacy analog asset and put it on the traditional financial rails, so everyone can trade it who has access to a brokerage account, right? These are available all over the world. The US is by far the largest market for ETFs. They are often not the first. So Europe and Canada and a few other places, Brazil even had these crypto ETFs before the US actually got comfortable with them. But really what it does is it takes something and puts it on the traditional financial rails, and it does like an electronification thing, right? So you can trade gold. It's held in a vault somewhere and you're trading it back and forth on an exchange, and it's basically IOUs. So the way to think about an ETF is they started off as something called commodities warehouse receipts, which basically, like, if you gave gold or say like oil or something to a warehouse, they would say, you have 100 barrels of oil. Here's a receipt that says that. And rather than moving 100 barrels of oil or a ton of gold, you could just trade those receipts. And that's how things used to be done. And that's the background of how an ETF works. And that's exactly what's happening with these crypto ETFs, right? So what you're doing is you're taking these digital assets and you're putting them in a cold wallet somewhere. These institutions are taking care of it. They're supposed to be securing your keys. We can all talk about like the issues with hacks, but the theory is that these assets are going to be safely stored somewhere, and it's going to take these DeFi Web3 assets and put them on the old school TradFi rails. So like with gold, it was taking this old school analog asset and put it on the upgraded traditional financial rails. And now it's kind of the other way around, in the sense that we're taking these Web3 DeFi assets and putting them onto the traditional financial rails. And there's a lot going back and forth, of mixing of those things. But really all it is it's wrapping it in a security wrapper with a lot of different regulations and security guarantees and legal guarantees, regulatory certainty, and putting them in an ETF wrapper. For a lot of the retail audience that is likely listening to this doesn't really care all that much about those guarantees. But if you're an institution or you're a fund or you're something that cannot invest in things other than, say, an equity, a security, or bond, all of a sudden this makes it viable for you to get access that way. So that's the starting point of like why I think these matter. But I could keep going, but I'll stop there.
That was a great introduction. And as you've mentioned, so the US was not the first area to launch a spot Bitcoin ETF, but if we do focus on the US launch of the spot ETF, because it was a major milestone for Bitcoin legitimacy in the traditional financial world, as you've mentioned. And you've mentioned there that there are similarities to the spot gold ETFs when it comes to just the wrapper and how to explain it to the traditional investor. 1 year on, let's talk about demand and let's talk about appetite from the institutional investors. How big, just how successful was the spot Bitcoin ETF launch? And if we look at 1 year on, what does it say about institutional appetite to Bitcoin? And could it possibly be one of the reasons for the positive market sentiment that we did see towards the end of last year?
Yeah, so unequivocally, the spot Bitcoin ETF launch was the biggest ETF launch in the history of the world. And nothing else is remotely even close, to be quite frank. I mean, they peaked at just over $120 billion in assets. And to be completely honest, the gold ETFs that I talked about, like Spider's GLD or gold ETFs in general, at the time when Bitcoin, right now they're around 100 billion after there's been some pullbacks, but there's a swinging movement in price action, right? But the peak so far is in the $120 billion range. They got it within $15 billion of the assets in US spot gold ETFs. So spot gold ETFs launched back in 2004. We think of them as a very successful category in ETF wrapper. They show the strength of the ETF wrapper, and Bitcoin ETFs basically near on that. Part of that is because of flows. They're one of the reasons that they're very successful. They're heavily traded by the institutions you're talking about. There's a lot of people buying them. So we've seen on a net basis around $40 billion flow into these things. Now, the way ETFs work, essentially the way an ETF works is I talked about those receipts. The benefit of what makes them so strong is the fact that you can always hand over those receipts or shares of the ETF and theoretically get back the underlying asset. So at all points, if there's ever a deviation between those receipts trading on exchange or the ETF shares and the trading value of the underlying assets, whether you can always sell one and buy the other. Whatever's trading higher, you can sell. Whatever's trading lower, you can buy. So it kind of brings things in line. And when that happens, you're going to see inflows and outflows. So you see so much inflows because there's so much demand for these ETF shares, right? So that's what we've seen. We saw over $40 billion flow in the first year. By far a record. Nothing else is even remotely close. That the iShares BlackRock or iShares Spot Bitcoin ETF, IBIT, is individually one of the most successful products out there. So the demand is through the roof. That said, on the institutional side, a lot of this demand is likely from retail. We only know about 25-ish% for the US spot ETFs. Part of that is because any institutions outside the US buying these things don't have to report to the US government what they hold. A lot of the reporting that we do have, decent amount of it is actually from hedge funds. So we do think some of this demand is hedge funds are going long Bitcoin, but they're actually using these as trading vehicles, which is what ETFs were created to do. They're basically used as trading vehicles for institutions because they're so liquid. And what they do is everyone, whether it's you, your grandmother, the hedge fund manager down the street, the sovereign wealth fund, everyone's playing in the same pool. So yes, some of these people are much more likely to be trading like it's a very liquid asset, but some people are just buying and holding. And this like brings everyone under the same roof, and it helps drive costs down because everyone's using the same product. So, but what we've seen with these Bitcoin ETFs, not to get too in the weeds, they're often being used by these hedge funds for something called the basis trade. So that is a huge part of the demand. A huge part is retail trading. There is a lot of advisor interest, which manage trillions of dollars for their end investors. But that area is probably the biggest growth area potentially for these ETFs. Advisors tend to use ETFs more than any other individual type of person out there. And they're really just getting started. A lot of advisor networks, a lot of wealth management platforms, what we call wirehouses, think UBS, Merrill Lynch, Morgan Stanley, these brokers that control trillions of dollars in assets. A lot of the times they can't really even buy these things just yet. So the way there's two ways that you can buy these. There's multiple levels usually, right? So essentially they have these lists of like what you can buy, what you can't buy. And also you might be able to buy this as long as your client comes to you directly. So if you're my client, you come to me and say, I know you're managing my money. I want to have some allocation to Bitcoin, 1% to 2%. Then I could buy that for you. But right now, most of these platforms, I cannot go to you and recommend a spot Bitcoin ETF or any crypto ETF. You would have to come to me. And even if you come to me, I'm not allowed to buy it because it's still not approved. Going back to that basis trade, just to like circle up and close up what I think a lot of this is, there's billions and billions of dollars tied up in this basis trade. And what it really is the way futures work is every month they settle. So if I buy a futures contract, I say I'm going to buy Bitcoin for $100,000 at the end of next month. My contract is that I need to be delivered one Bitcoin at the end of each month, right? If I'm buying that contract, and there's a premium that is kind of persistent in Bitcoin. It kind of goes down and ebbs and flows a little bit. But when that premium gets really high is when we see a huge amount of inflows into ETFs, because if I can sell you a Bitcoin forward at the end of the month for $100,000, and right now it's trading at $90,000, I'm going to sell you that contract, which means I'm short Bitcoin. And then to offset my risk, I'm going to buy the Bitcoin ETF. And all of a sudden, I just make $10,000 by sitting on my hands for a month and then delivering you the thing, and I get $100,000 basically for free, and everything's washed clean. Theoretically, that shouldn't have much of an impact on price, but as that premium that we talked about, again, to be clear, it's not actually $10,000. I was just using an example there. It's not that big, but it is like double-digit percentage points per year. So there's a lot of institutions getting involved that necessarily don't even care about Bitcoin or crypto, but they see that situation. It's a special situation. They're like, I can earn money for my clients, and there's very, very little risk in me doing this. So that's where a lot of the demand is coming from as well. So going forward, I think a lot of demand is going to be from those wealth managers, those advisor networks, potentially. Right now, a lot of the trading that we're seeing is likely from the hedge funds and those people entering those sort of basis trades that I was just talking about.
And this is a really interesting point to note, and I really want to tap into this for our audience that are listening. How significant, because you have said that this is a trading tool that a lot of the institutionals are using, is the inflows and outflow numbers that we do see. A lot of the time on X and certain media narratives, they will really highlight the outflows per day, and if it's a significant high or low inflows. How much should people that are watching the market, how much should they pay attention to, particularly the inflows and outflow figures?
Yeah, honestly, I would say on like a day-to-day basis, it's probably not worth your time. I mean, part of the problem is like a lot of like the regular media people covering this are like, oh my God, all this money came in. And people on Twitter or X, I constantly get this question, like, if all this money came in, why isn't the price going up higher? And what people need to realize, by the time we see those flow numbers, like all the transactions happened already. Like there's sometimes 24 hours already passed, or like sometimes less than that, but like it's in the past. Like it happened during the trading day. The money came in, the Bitcoin was bought, everything just takes some time to settle in the TradFi world. And then we see those flow numbers. So like when you're seeing flows, it's already stale data. So one, it's good to show us, we're talking about here, there's a lot of demand for these products. A lot of people want exposure to Bitcoin. Maybe people who couldn't access it directly, or they didn't want to open an account at Binance or another exchange, or don't want to take care of their own cold wallet, and they trust these traditional financial institutions, which ironically enough, these traditional financial institutions are trusting exchanges and custodians, kind of like Binance in the back end, but we can go there if you want. But it's really these numbers. One, they show demand, they show interest. We can look at trading volume. We can see a lot of options volume and derivatives use of these products. So it's being heavily used. But trying to like look at this and say like, oh, look at all this money that came in, I should buy because other people are buying. You're looking in the past. You're not seeing like real-time data. So that would be basically my caveat there. But also, it's not completely irrelevant. The other thing is that people like see numbers, and we see billions of dollars, and people are like, oh my God, and you hear billions of dollars. So for example, like in the middle to end of February, we saw a huge outflow. We saw a huge drop in Bitcoin price and crypto prices more broadly, right? And we saw like $3+ billion come out of the spot Bitcoin ETFs. And that sounds like a bloodbath, right? Like, oh my God, over $3 billion came out. One, I think some of it was unwinding of that basis trade I was talking about. And two, when you say 3 billion, that's a huge number. But what you see in financial media all the time is they don't give you a denominator. They don't like quantify that number. And if you think about it, at the beginning of that time period, those ETFs had about $115 billion. So this is like a 3% hiccup in flows coming out of the fund. And so when you think about like on like how much was actually in the fund, it's not that big a deal. If $3 billion came out of these things in like March, 2 months after these things launched, that would be a huge deal. That would have been a lot of money that came out. But on a percentage basis, the way ETFs work is, like I said in the beginning, they're built to create new shares or destroy shares. So you're always exchanging the underlying asset for shares of the ETF as demand rises and as demand falls, right? So the benefit of an ETF is you can always change the supply to meet the underlying demand. So when you see outflows, that means there's less demand for the ETF shares. And that's all this is. And like with the way an ETF market grows is you're going to see like 1, 2, 3, in the case of the Bitcoin ETFs, 5 steps forward. And you're always going to see a step back or two, right? There's always going to be some level of outflows, particularly when price comes back. So it's just standard, but I wouldn't really pay too much attention to it on a day-to-day basis. It's probably not going to be giving you as much signal as you really think.
That is some great alpha. Now, if we look ahead to this year, because I'm really curious, you said that spot Bitcoin ETFs last year was the most successful ETF launch in history. Do you think 2025 will be another strong year, or are you seeing some signs of market saturation?
Ooh, that's a good question. For the Bitcoin ETFs, like I said, the problem right now is that they're not completely greenlit. Like if you think about it, like a traffic, like a lot of people are still on red, not letting people go and buy these things just yet, particularly those wealth platforms I talked about. So as they get to yellow and eventually green, that's when you could see a further unlocking of demand. So no, I don't think it's done yet. We saw BlackRock there. These things called model portfolios for the normal investor out there. Basically what it means is, say you go to an advisor or you want to have somebody else manage your money for you. They track these model portfolios. So it's going to give you a certain amount of US equities. It's going to give you a certain amount of emerging markets equities, a certain amount of bonds. And one of BlackRock's models, it's a smaller model they use, actually added their Bitcoin ETF to the model in a 1 to 2% allocation, which is huge. That's a big deal from like a 0 to 1 starting point. But you got to realize also it's like really 0 to 1, because compared to their other models that are like their US equity model or something along those lines, it's not that big, but they're dipping their toe in the water. So no, I don't think it's saturated. I think there's a lot of people that are still interested. I think people are like waiting for their times and pullbacks to potentially get into the market. It'll be interesting to see who has bought these things when we get 13F reporting in the US, which happens at the end of each quarter, and then it's released on a 45-day delay. So we'll have a better idea of maybe who bought in the first quarter in those dips that we were talking about. So yeah, I don't think it's saturated, but we did get Ethereum ETFs that launched also in 2024, which got off to a pretty cold start, but actually had a hot start once Donald Trump was elected. And I think we're going to see a bunch of alternative coins and crypto index funds launching in the US as well. Again, a lot of those products are already launched in places like Europe and Brazil and Canada and some other areas of the world. It's just that the US market is basically the market you should care about as far as assets go. I saw South Korea is going to be launching some stuff. There's other Asian countries that are going to be launching this. It's just that the market for liquidity and assets and flows, most of it is going to come from the US, because institutions, even if you're not based in the US, you like to come to the US to trade your ETFs, because as I talked in the beginning, there's so many people, there's so many like different fish in the sea using the US ETF market. It's basically like we export liquidity around the world, because institutions around the world will come to the US to use our ETFs because of the derivatives usage. There's so many people there. And basically what happens as you build up liquidity, it's almost like chumming the water if you're fishing. Like the big fish, the big institutions are more likely to come to something that's very liquid, has a lot of derivatives liquidity, all these different things. So eventually I think we can get there with these other ETFs as well. But no, it's not saturated for the Bitcoin ETFs in my personal view.
Now, you've mentioned the other ETFs, and I do have to ask you, and I think everyone is also very curious on 2025 and what it's going to bring for the market. So other ETFs that are not yet in the market, but very soon could be. Let's talk Solana. So the likes of Grayscale, Van Eck, and others have filed for a Solana ETFs, which are now under review by the SEC. Review period, if I stand correct, is October 2025. If we do see a Solana ETF go to market, what are you expecting demand to be like? You mentioned that the Ethereum ETFs in the US last year got off to a cold start. Donald Trump came into elect, things started heating up. Are you expecting equal demand for Solana, if not a little bit higher because of the meme coin craze? What is your take?
Yeah, so for Solana specifically, the way I would think about it is the Ethereum ETFs, if you look at them as like just an ETF launch as a category, extremely successful. They were a smash hit. They have $10 billion in them right now. They've taken in $3+ billion of flows. Ironically enough, they started with 10 billion. It's just that Ethereum price has not gone anywhere since for a while now and has gone down a little bit, but we don't need to go down that rabbit hole. But again, compared to the Bitcoin ETFs, you would say they're a failure. So I think people in the crypto world saw the launch of the Bitcoin ETFs, the success of the Bitcoin ETFs, and kind of thought, if we can get an ETF, we're also going to see tens of billions of dollars flow in 1 year. And that simply just is unlikely to be the case. I think they will be very successful. An ETF is successful if we can get to like $100 million in assets, right? So I think the Solana ETF specifically will be successful. I think a bunch of these other altcoin ETFs will also be successful. But I think people need to temper their expectations. Like even just getting $1 billion into these Solana ETFs that launch eventually this year. Again, you said the final deadline, it is October 2025. There's nothing stopping the SEC from potentially approving these things earlier. The new SEC, which we're expecting Paul Atkins to be leading, Commissioner Hester Peirce is running a crypto task force. They have dropped a whole bunch of lawsuits against Coinbase, Kraken, Binance. There's a whole bunch of things that they are like kind of settling and figuring out right now, where they called some of these tokens securities. So I think they need to settle all these lawsuits, figure all this out, and we can get some of these altcoins. But I would temper your expectations and flows for these things in the sense that I think they'll be a very successful as far as the ETF world goes. I think they can get hundreds of millions, if not billions of dollars coming in. That doesn't mean that they're going to be $100+ billion category coming from the ETF world. And I think another area of growth and demand will become from these index funds that are going to hold Bitcoin, Ethereum, Solana, Dogecoin, and maybe not Dogecoin, but Solana, XRP, things along those lines that will provide more demand as well. It's just so basically, if you look at like the size of Solana versus the size of Bitcoin in the like regular spot market, it's if Solana can get to the same ratio, that would be pretty good, which is like 7-ish%, I think, or 5 to 7% of where Bitcoin stands on a market cap basis. So yes, I think they'll be successful. There'll be a lot of demand. It's just people need to realize that the level of demand we saw for Bitcoin ETFs was absolutely off the charts, which I think partially has to do with it's the first of its kind. A lot of people think crypto and Bitcoin are synonymous. And the digital gold narrative is way easier to sell than the stuff that you need to explain for something like Solana or Ethereum or even BNB. Things along those lines are a little more nuanced than this is a hedge against currency debasement. It's digital gold.
Yeah.
It's very simple.
Yeah, and this actually is something that the Bitwise team have spoken out and said that actually that when breaking down the use case and the selling point for a spot Ethereum ETF, they did have the acknowledgement that it was a harder pitch for the institutional investors to really wrap their head around. I have to reference, so you and Eric Balkunis, who is also a Bloomberg ETF analyst, both suggested XRP had a lower chance of SEC approval compared to other cryptos like Litecoin. I'm curious to know if that's still the case and if there's any other under the radar or possibly kind of altcoin specific spot crypto ETFs that are on the market that could be next in line for an ETF filing.
Yeah, so ironically, I think Litecoin is likely to be the next one. Its final deadline again is also in October, but it's before those other assets. So I think they'll be first. It seems like there's been a lot of movement. It seems like a Litecoin ETF might have even been approved under a Gary Gensler SEC administration. There's no way for us to know for sure, but they were already moving on that. So it seems like one of the reasons is Litecoin was never called a security, unlike, Solana, XRP, or Cardano, which have been filed as well. So you also have Dogecoin that's been filed by Grayscale and Bitwise, and then HBAR has been filed by Canary and Grayscale, which is Hedera. So like those ones were never blatantly called a security by the SEC. So one of the reasons we were uncertain, or at least we thought the timeline would be pushed back for those names that were called securities by the SEC, is kind of being taken care of by this SEC and the dropping of lawsuits, rescinding Wells notices, all these different things that are happening. Things are moving, to be clear, faster than I expected. I thought the SEC was going to untangle all of this mess around what is security, what is a commodity, what can go in ETF wrapper. I thought it was going to take time. Hester Peirce and the crypto task force is moving absurdly fast. So maybe I was wrong in the sense that this thing could come out much sooner than we first expected. But yeah, we think Litecoin is likely. We have the highest odds there because there's no concerns about whether or not it's security. Dogecoin, ironically enough, you talked about meme coin ETFs. I think that we have a couple filings there. I think that could get through, largely because it's a little different than like the pump.fun meme coins a lot of people are used to. This actually has its own chain and a lot of different things going for it that like something like a Trump or a Melania coin or, one of Malay's coins, Libra, would have going for it. So it's a little less complicated. And I think part of the other benefit here is like no one's ever going to call Dogecoin a security, I don't think. So that's another benefit. So it really comes down to what does the SEC and the US government define as security versus a commodity, which the SEC and CFTC, two two agencies need to figure out in the US. But it also would be way more beneficial if Congress would step in and define these lines themselves. But until then, it's going to be up to the SEC to like kind of draw those lines and tell us where things are going to sit. But based on everything, it seems like they're going to let a lot of this stuff through and come into an ETF wrapper, and particularly those index funds I was talking about. So we have products from Hashdex, which is an issuer. They have a very successful product down in Brazil. They have products in Europe. They now have a product that holds just Bitcoin and Ethereum right now. So does Franklin Templeton, another huge US TradFi asset manager. And they are both trying to basically file with the SEC, say, we hold Bitcoin and Ethereum. We'd like to hold a whole bunch of other assets too and make this an index fund. We have Grayscale and Bitwise, who you just mentioned, that have products that are trading over the counter as closed-end funds. So they have premiums and discounts. They can't do that process I talked about with an ETF of creating shares or destroying shares, but they've filed with the SEC to list these things as ETFs as well. So I think those might be the first, shoe to drop, the first types of products that we get. So I think basically it's open seasons. We have pretty much over 50% odds of approval in 2025 for pretty much all of those things I was talking about, just because we don't know where the SEC is going to draw the line about what is and isn't allowed, but we think they're coming. And as soon as before the end of March, we could see a Solana futures ETF come to market. We have one. The ones we were just talking about have their spot products. They go through a very unique situation. They need express approval from the SEC. Any other products that use futures and go under something called the 40 Act, which you don't need to get into, the way they launch is simply by like not being stopped by the SEC. So it's not as like you need express written approval. And those products would hold futures. They can offer leverage and things like that. They're not going to be the ones that see the most demand, in our opinion. The true spot products that just hold the underlying assets are the ones that will see the most demand. And we think we're going to see a bunch of those launch this year.
So 2024 was the year of the spot Bitcoin ETF, 2025, the year of the spot crypto ETFs. You mentioned Dogecoin there as one that you say is not so far-fetched of a likelihood of a spot Dogecoin ETF approval. And I'm really curious because Dogecoin, huge retail following. But do you think if we do see a spot Dogecoin ETF go to market, do you think it would attract institutions, or would it still be a retail play?
Yeah, I think it's probably more of a retail play. I mean, no matter how you slice it, there's different areas of the market, right? Like if you want the ETFs, they can, as I talked about many times, right? They can fit many use cases. Like I said, the hedge fund managers, the sovereign wealth fund will use this thing, down to like some kid trading in their basement might use this as well, right? Your grandmother might use this for buy and hold long-term investment of like the global stock market. So there's some products that we call we call them hot sauce. So the way you build a portfolio is a lot of people will build like a core approach. They're going to have like their long-term holdings sitting there, and maybe they'll have 10 to 15% of their assets in these things that we call hot sauce. And we think a lot of crypto fits into there. This is something that retail tends to love. These 2x leverage single stock ETFs like MicroStrategy, or I guess I should call it Strategy now. All these things out there. And I think Doge is more likely to be retail driven. I mean, I'm not going to say no, never, no institutions ever going to get involved here, but it just feels like something that would be much more for a retail type audience. But I'm happy to be wrong going forward if we find out that institutions do love investing in a Dogecoin ETF.
Fantastic. Well, James, you've given us so much alpha and so many key points to take away there. So thank you so much for your insights. I am going to link James's socials down below. So if anyone is following the ETF craze of 2025 and what news it will bring, absolutely go and follow James for some more information. And James, thank you so much for your time today. It was an absolute pleasure to have a little bit of a breakdown of where we are in the market, and huge value from the conversation. So thanks for your time.
Thank you for having me, Jessica. This was a lot of fun.
Thank you so much. And guys, thank you so much for watching. Don't forget to subscribe if you haven't already to not miss many more conversations like this one.